Hello, everyone, and welcome to this presentation on Wavestone's first quarter revenue for fiscal year 2026-27. I am Benjamin Clément, Head of Investor Relations and Financial Communications at Wavestone, and here with me today, I'm pleased to welcome the co-founder, chairman, and CEO of Wavestone, Pascal Imbert. Hello, Pascal.
Hello, Benjamin. Hello to all.
Here around the table as well, we have the CFO of Wavestone, Laurent Stoupy. Hello, Laurent.
Hello, Benjamin. Hello to all.
And we are accompanied by Karsten Höppner, Deputy CEO, who will participate in the Q&A session. Hi, Karsten.
Hi, Benjamin, and good evening, everybody.
Well, the stage is now set, and I think it's time to start. Laurent, the floor is yours.
Thank you, Benjamin. And let's start with Wavestone's Q1 performance in the 2026-27 fiscal year, covering April to June 2026. Over the quarter, Wavestone generated consolidated revenue of 227 million euros, down 2% compared with Q1 of the previous year. As a reminder, this figure includes Weavoo, consolidated since June 1st, 2025. On a constant scope and forex basis, revenue also decreased by 2%. There was no working day impact over the quarter. Let's now turn to the operational indicators. The utilization rate stood at 71% in Q1 compared with 72% for the full 2025-26 fiscal year. As a reminder, over the full previous year, the utilization rate was 72%. As for the daily rates, it was 926 euros at the end of June 2026, down 1.3% compared with 938 euros over the whole of last year. Part of this change is related to an evolution in original revenue weight. From a business development perspective, the order book was 4.5 months of work at end of June 2026, compared with 4.4 months at the end of March. It was 4.3 months of work 1 year earlier. With respect to human resources, Wavestone at 6,122 employees as of end of June 2026, stable compared with end of March 2025. Lastly, the staff turnover rate on a rolling 12-month basis was 12% at the end of June, stable compared with the end of March. I will now hand over to Pascal.
Thank you, Laurent. You have just seen the figures. We had a difficult start to the 26-27 fiscal year, with in particular an insufficient utilization rate. From a market standpoint, the key development at the start of this fiscal year is the accelerated shift of our clients' investments toward AI, a shift that is taking place at the expense of our clients' project in most of other areas. Wavestone is particularly exposed to this movement because, as a consulting firm, our business depends primarily on our clients' new investments, and therefore, on the one hand, the momentum on our AI business continues to be strong. AI projects now account for 22% of the firm's revenue during the first quarter, compared with 17% last year. But on the other hand, this momentum does not yet offset the decline in demand across the rest of our activities. From a geographic standpoint, the firm performance is mixed as well. On the one hand, France posted mid-single-digit growth, but on the other hand, the GSA region, Germany, Switzerland, and Austria, recorded a mid-single-digit decline of its revenue, notably driven by the continued decrease in subcontracting. And as far as the US and UK region, revenue was also down significantly year on year, reflecting the decline recorded last year in the UK and a dip in the US due to a number of delays in client decisions, despite a healthy commercial pipeline. In the context I've just described, our priorities are more than ever the ones we outlined at the beginning of the fiscal year. Our first priority is to accelerate our shift toward AI, to respond to the scale and speed of the shift of investment taking place among our clients, a shift that we need to capture more effectively. We need to put AI transformation increasingly at the core of our go-to-market, and we need to further accelerate the growth of our AI activities, adding to our recruitment in this area, the redeployment of some of our teams towards our AI business unit. Our objective is to make AI transformation the main growth engine of the firm. Our second priority is to improve our operational performance by strengthening the quality and consistency of our execution, an execution quality that is not yet at the level required by the demanding and volatile market in which we operate. Improving our execution quality means being agile in allocating our resources to the clients and topics that have the strongest momentum at any given time. It means also improving how we manage staffing and how we steer our operations. That's what we call in the internal Wavestone language, our performance management that day-to-day takes care of the optimization of the staffing of our team and the optimization of our day-to-day decisions. And it means finally implementing faster the decision we take in order, for instance, to build our strengths on one industry or to build our AI activities in order to answer to the shape that of the opportunities that are coming from our clients. These two priorities are fully embedded in our Lead the Shift plan, and they are at the heart of our action plan for the 26-27 fiscal year. The transformation we are carrying out could weigh more heavily on our performance than planned, as the shift of our clients toward AI is particularly fast and deep. This transformation, combined with a difficult start to our fiscal year, leads us to adjust our targets for the current fiscal year, the 26-27 fiscal year. We are now targeting annual organic evolution of our revenue in a range from -1% to low single-digit growth, compared with our initial target of low single-digit organic growth. And in terms of profitability, we are now targeting a recurring operating margin between 11% and 13%, compared with our initial target of around 13%. These targets exclude any acquisition that we could make during the fiscal year. And in this area, we are also announcing today the acquisition of AI Builders, a French consulting firm fully dedicated to AI and data strategy consulting. AI Builder is a young company. It was founded in 2019, and it's supporting senior executives of large companies in framing, structuring, and scaling their AI transformations. The firm has around 50 professionals, 50 consultants, and is targeting revenue of 10.3 million euros in 2026, with an adjusted EBITDA margin of 15%. Wavestone has acquired 100% of AI Builders shares based on an enterprise value of 19.3 million euros. This acquisition is fully financed in cash from our available resources. AI Builders will be consolidated in Wavestone's financial statements as of August 1st, 2026. This acquisition, of course, is fully aligned with our Lead the Shift strategic plan. It enables us to expand our AI client and decision maker base, and it strengthens our value proposition in the area of AI transformation. Our next publication will concern our H1 revenue, and it will take place on October 29th. Thank you very much for your presence, and I wish you a very good end of day.
Thank you.
Thank you. Bye-bye.